Dear ladies and gentlemen, let's get started with our today's business event. I'm very happy to welcome you today to our virtual zeb business event, this time focusing on the relevance of stablecoins and CBDCs. We started this year back in April with our digital asset business event series by going back to the basics and focusing on the question why also traditional banks should consider a digital asset offering and why they should give their clients access to digital assets. In today's event, we want to go to the other side of the spectrum and zoom in on stablecoins and central bank digital currencies to discuss their relevance for the financial services market overall, but also particularly in Switzerland. So let me introduce you to the agenda and our speakers for today. First, my colleague Cedric Lüscher, who is the zeb topic leader for digital assets in Switzerland, will give you an overview to stablecoins, including a high-level definition where stablecoins come from and how stablecoins are regulated today. After that, we will hear from Lydia Kurt how the Swiss payments infrastructure is evolving and specifically how a stablecoin for retail usage would support this evolvement. The company Swiss Stablecoin was founded only last year and has the ambition to support Switzerland's monetary sovereignty and economic innovation to a digital Swiss franc. Lydia is a co-founder and member of the board of Swiss Stablecoin and has multiple years of experience in the asset management industry overall and specifically with digital assets. After Lydia, the next speaker will be Michael Hornung from Visa in Europe. I guess I do not have to explain to you what business Visa is in. And as a global leading payments company, Visa has also strong interest in stablecoins. Mike is the crypto business lead of Visa Europe and is responsible for delivering Visa's strategy in this topic. Therefore, Mike will give us an overview on Visa's quest to introduce stablecoins and CBDCs in the cards business. And after Mike, our last speaker will be Tony Caradana. Regular followers of our virtual business event series and DLT already know Tony from last year. Tony is the founder and chief technology officer of the company Blockchain Trust Solutions and has a long-standing track record in the global DLT world and around digital assets. Tony will talk about the relevance of a Swiss franc stablecoin in a decentralized finance world, and specifically, how can a digital Swiss franc benefit the treasury of large corporates? So before we go into the first presentation, please allow me one last remark. If you wish to ask questions, you can do so by using the chat functions here in Teams. The various questions will be read by our team, are consolidated and used later in the Q&A discussion. With these intro remarks, I would like to give it over to you, Cedric.
Yes, thank you very much, Norman. So in the next couple of minutes, my aim is to talk to you a little bit about where stablecoins come from, what they are, what typology applies, and also what their relevance is for the financial services industry. Now, stablecoins, they all started back in 2014 when the first stablecoin Tether was introduced. Back then, in the early days of the crypto trading, crypto traders faced a tremendous challenge. They were basically stuck in the crypto universe and were facing tremendous amounts of volatility. So they were looking for a way to mitigate this volatility, and obviously smart people came up with the idea of introducing a value referenced token. Fast forward 2 to 3 years, roughly to 2017, when the first use cases about decentralized finance then took off. Again, this idea of volatility mitigation was applied with the help of stablecoins. If you think, for instance, of staking or also lending pools, there you lock up your liquidity for a certain amount of time. Now, very often your traditional cryptos, such as Ether, etc., would face quite large price swings, thus also potentially eroding the gains from locking up your liquidity through these price decreases. Nevertheless, stablecoins slowly but truly gained gained market adoption and also soon caught the attention of large corporate banks and also central banks. Thus, these players also started to play around with stablecoins. For instance, JP Morgan in 2019 introduced their JP Morgan coin. Now, compared to DeFi and the DeFi use cases, obviously these traditional players were much rather looking for process optimization and more efficient processes by the application of stablecoins. For instance, in cross-border payments, in the cash leg in capital markets, or also in e-commerce. As you can see, over time, quite a lot of different players started to issue different stablecoins. That's why in the end, today we also see quite a large and diverse landscape of stablecoins out there. Now, how can you differentiate, how can you classify different stablecoin types? I guess the best way to do so is really to look at the issuer on the one hand and also at the claim on the underlying on the other hand. By taking these two criteria, today we can broadly differentiate between three buckets of stablecoins. The first bucket, I'd like to call it the native stablecoins, is that of privately issued stablecoins by an organization such as Tether or Circle in the USDC case. These stablecoins are usually bearer instrument that represent some sort of claim against the issuer. They have different backing types, such as a fiat reserve, or may also be crypto-backed, or in the case of Terra Luna, may also have algorithmic link or an algorithmic value reference. Now, as you can imagine, as of the downfall of Terra Luna, for instance, the last category here came a little bit out of fashion. Importantly, for this first class or first bucket of stablecoins, the connection to the traditional monetary system actually is only in case of settlement of these stablecoins, or the settlement in central bank money only happens at cash out of such stablecoins. This then also brings me to the second bucket. The second bucket of stablecoins is the so-called bucket of deposit tokens. Some of you may, for instance, know here the current initiative by Swiss Banking together with a couple of Swiss banks. Deposit tokens represent nothing more than deposit claims against the issuing institution and are therefore simply a digital representation of what we know as deposit. The regular liquidity, capital, and risk management requirements apply, and therefore also the entire safety of this bucket is perceived to be a little bit higher than with the first class. Importantly, and the last remark to this category is the fact that deposit tokens are also backed by the commercial bank deposits that banks have at the central bank. I guess also adding to the perceived security here. Central bank is then the term that brings me to the last bucket, to the bucket of the publicly issued central bank digital currencies. Here you may know initiatives such as the digital euro, which is a retail bank, central bank digital currencies, or also the wholesale Swiss franc, as the Swiss National Bank has been testing in quite some initiatives lately. I guess this last part also gives the government, and in this case the central bank, the most control still over the monetary policy, and on the other hand also because of all this control raises a few questions about data protection and also society as a whole. Because of all that, obviously, regulators have also taken notice of the tremendous amounts of different stablecoins out there. Therefore, they have started to sharpen their regulatory landscape, and if you, for instance, consider the Swiss FINMA, have started doing so already back in 2019. The FINMA simply applied a principle-based and also technology-neutral approach by saying, well, we look at the economic function and also the purpose of a stablecoin to derive the regulatory requirements that apply. Principle of same rules, same risk applies. And I guess in this case, if you think, for instance, about the fiat referenced currency or fiat referenced stablecoin, here you really have different options than as to what may apply. For instance, in certain cases, it may be treated under the Banking Act. It may also be treated under the Collective Investment Scheme Act or even under the Financial Infrastructure Act. So you see, again, this very broad principle of same risk, same rules. If you then, for instance, look to Europe, there the entire situation looks a little bit different. So far, Europe or the European Union doesn't know a singular approach to stablecoin regulations, but will only introduce one with the Markets in Crypto Assets Directive in 2025. The MiCA, as it's called, will introduce two different types of stablecoins, the e-money tokens that have a purpose of, payments, and then also asset reference tokens. On top, the MiCA will also introduce very specific rules and regulations when it comes to the issuance of such stablecoins, and will also introduce certain bans. For instance, under MiCA, it will not be allowed to have algorithmic stablecoins such as Terra Luna, or there will also be a ban on interest and other benefits on stablecoins. This is actually quite interesting, as in the end, a lot of the DeFi use cases that we see out there actually are also incentivized by that. Nevertheless, as you can see, over the last couple of years, we've seen a rise in the adoption of stablecoins. We've also seen, in the end, a rise in regulatory certainty around stablecoins. So the question is, where does it all leave us? And I'd like to close off my presentation with a actually quite recent project, quite recent example. The idea of stablecoins in the financial market, financial services industry, ultimately is to help making processes more efficient. So, for instance, if we look at the capital markets value chain, one can, for instance, think about the digital issuance of a bond on blockchain. So far, the clearing and settlement of this bond has only been DLT enabled on the asset side. The cash leg of a trade between, for instance, Bank 1 and Bank A and Bank B, so far still had to be settled via the traditional central bank money. Now, by introducing, as in this case here, a wholesale central bank digital currency, the entire trade can be handled also atomically, therefore making it instant and more efficient. Well, I guess some people still think that this may be a distant future, but as was revealed also by the Swiss National Bank's Project Helvetia 2-3 days ago, this is actually already happening and will also, I guess, be a blueprint for future initiatives in that area. It is a very good example of what DLT application may actually do if you apply it properly along the entire capital markets value chain. But of course, there's also other use cases, and this then also brings me to the next speaker, who is going to introduce a retail-focused stablecoin. Thank you very much.
All right, thanks a lot, Cedric, for this initial overview. So Nicole, you mentioned it. Let's go directly to Lydia Kurt, who is going to focus on the evolving Swiss payments infrastructure with a Swiss franc stablecoin. Lydia, can I ask you to take over, please?
Yes, very happy to do so. It's a pleasure to be here. Thanks for the invitation. I'm happy to talk today about the Swiss stablecoin project. I'm just going to start with the first slide. If you can just move ahead with the slides. Can just skip that and go to the yes. I'm going to start on our project about on who is behind Swiss stablecoin. Before I then enter into what we are actually doing and why we are doing it. So the project Swiss stablecoin is a project that has been initiated originally by Pascal Bruderer, a politician in Switzerland. She has been one of the designated board of directors at Libra, the stablecoin project of Facebook, and has there gotten into the topic quite heavily. We all know Libra didn't happen due to various reasons, but Pascal stayed on the topic and saw the various reasons why stablecoin, especially from Switzerland, has to happen. She looked for a team to help her execute. So we co-founded the company Swiss Stablecoin AG last year to actually start with the project execution. There are people involved such as Valerio Roncone, Thierry Kneisler, which is former CEO of Twint, and various other people that are currently working on the company and on the project to execute a stablecoin from Switzerland. If we jump to the next slide, why are we doing what we are doing with Swiss stablecoin? What we see is we have an environment in the area of tokenization. You can just click through all the points. Yes, perfect. That's it. What we see, we have now a technical environment in various areas. So we have a technical advancement in the area of IDs. We are now able to have contracts digitally. We are able to store data in a different way. We are able to have an asset ownership framework that is new as opposed to 10 or 15 years ago. And all that together makes it possible to also have money in a different way. What all of those things link together is its programmable purpose. So all those different areas will in the future be programmable, and money is one of the most important things that will be programmable in different ways. We heard it could be stable coins, it could be CBDCs, but one of the most important features is its programmability. Sorry. So that was one of the main reasons behind why we started the project, but it wasn't the only one. If we could just go to the next slide. What we saw is that we have a financial market infrastructure, which is already very efficient, which is, especially in Switzerland, very secure. And so we don't need to change our existing financial market infrastructure. But with having these new technical possibilities, we have to add new technical features to our existing financial market infrastructure. So the idea behind Swiss stablecoin is not to create something new, something parallel to what we already have, but rather to create something on top of what we have by using our existing financial market infrastructure. How we are actually doing that, I'll deep dive a bit later in the presentation. The second very important point is that we are looking to keep monetary sovereignty. So that means that in Switzerland, we need to have our own authority about the Swiss franc. So meaning that having the financial situation as we have it today, there are especially stablecoin issuers on a worldwide scope looking at Switzerland, whether it might be interesting to launch Swiss franc stablecoins in Switzerland, as we have seen with the Facebook projects, but we also see with other projects. We also see cryptocurrencies which don't have the features or the stability features that stablecoins have, but still are started being used in some areas in Switzerland, even in governmental areas. If you look at Ticino, for example, so we see cryptocurrencies being used, and those are all currencies which are not from Switzerland, and there is the idea that the Swiss franc should be also guided by a project where the governance and regulation can be steered from Switzerland. The third point, very important point, is it's not about DeFi, it's not about the financial sector itself, it's rather about the real economy. So we see that the stablecoin has really a lot of added value also in the real economy, and a stablecoin is being created for the use in the real economy. So it shouldn't be just a financial institution project. It's not going to be a DeFi project. It's really a project from Switzerland for the use of or within the real economy. If you just go further one slide, please. So we talked about the top 4 points, and I'm going to deep dive a bit more on the bottom 4 points. Swiss Stablecoin is a regulated institution. It's regulated. Maybe I just have to open a bit of a bracket here. What means regulated? It's actually a very it's a big word and can mean different things. So in Switzerland, as you heard in the introduction, we don't have a stablecoin regime. We don't have a stablecoin license. So regulated in Switzerland doesn't mean that you have some form of a stablecoin license at the moment. What you could do in Switzerland is you could actually go for a fintech license or for a banking license, which are both license frameworks which don't really fit the stablecoin issuer. The fintech license, because it's limited in terms of volume, the banking license, just because it's too big of a license for just issuing a stablecoin. So what's currently happening, there are initiatives that are looking to make a new form of license. That's going to take a couple of years, but the government is actually working on it. So I would think in, let's say, maybe 3 to 4 years, you're going to have a license specifically for stablecoin issuers, where you have a regulated license form. So at the moment, that's not possible. So regulated means in the sense today, until we get into the area where we have a stablecoin license framework in Switzerland, regulated means working together with regulated institutions. That means, and I'll deep dive on that just in a second as well, it means working together with regulated banks for the services that have to be provided by regulated institutions. The stablecoin is going to be one-on-one backed, meaning that it's fully fiat backed, that for every digital Swiss franc, there will be a fiat Swiss franc with, as said, a regulated Swiss bank. Efficient and effective, I think I don't have to deep dive too much in here. It's the whole topic about using blockchain technology to make our financial infrastructure, our payment infrastructure more efficient. And last but not least, we intend to have a programmable function with the digital Swiss franc, meaning that we can use it for more than just payments. We can use it for conditional payments, and we can use it with linking, for example, with IDs. So when you are paying for your alcohol in a shop, that you don't have to show how old you are, but rather your money already knows that. If we jump one slide ahead, let's look a bit at what we are doing at Swiss Stablecoin. So on one side, at the bottom left, you see the digital Swiss franc, so the CHFD. That's the main part. That's our core infrastructure that we are currently building. So we are running, or we already run a pilot with PostFinance in the summer this year, and we are running another one. We're going live with a minimum viable product in Q1 next year. So the digital Swiss franc is our main task currently we are working on, and where we are also working together with others to bring that to life. The infrastructure, so that's everything around the digital Swiss franc. The digital Swiss franc will need to be able to be used for transactions. It needs to be stored. So here the idea is to have a very open architectural framework, so that in any wallet that can actually store those digital assets, that they can also store digital Swiss francs. But obviously there are additional infrastructure elements that we are building as well to actually help support transactions with the digital Swiss franc. And last but not least, very important, the use cases, actually the most important thing. So what is the digital Swiss franc used for? Here, as already said in the introduction, it's very much about the real economy. So the Swiss stablecoin is not going for the DeFi space. It's not going to be something that used instead of Tether or USDC. It's rather something that you're going to use in the real life, when making purchases in your real life, than rather in a DeFi sense. Sorry. Let's jump one slide further, please. Here, a bit of a deep dive on how the framework works, on how the operating model of the digital Swiss franc works. So when starting in the middle, we see in red the Swiss stablecoin. The Swiss stablecoin is providing the infrastructure of the digital Swiss franc. The Swiss stablecoin is also the issuer of the digital franc. I said it's one-on-one backed, meaning that we have fiat collateral. That fiat collateral is held with the banks, so with Swiss banks. One, I already mentioned it, is PostFinance, which is currently a partner that we are running the first pilots with. And what among others they are doing is they're holding the fiat collateral during that pilot and MVP phase. So here we are working together with banks, and as long as there is no stablecoin license, which might give you access to Giro accounts with the Swiss National Bank, that's the only way we are going to do it. Swiss stablecoin is also not intending to do a stablecoin directly to the retail clients. So it's not the idea that the retail clients are going to Swiss stablecoin and get the stablecoin directly from us, but rather here as well, as said in the introduction, we are using the existing financial market infrastructure. So it's not the idea to do something in parallel, but rather using what we already have and what is working quite well. So we are using the banks and other virtual asset service providers, WASPs, for the distribution, meaning that if you are a bank customer and the bank has access to the Swiss stablecoin infrastructure, and you can actually buy your Swiss stablecoins, your digital franc, through your bank. You can also exchange for fiat Swiss francs again through your bank. So the banks play a very important part in the whole operating model. And also the use cases, obviously, they're not, we are not doing the use cases. The use cases are ecosystems, are projects, are companies that are effectively using and making transactions with the Swiss franc in digital form. And if we jump to the last slide, so we heard now a bit how the Swiss stablecoin works, and I believe there might be a lot of questions to go a bit more detail, but that was just a bit of a short introduction. What we get as question quite a bit is how does it differentiate to other types of stablecoins, to other types of digital payment forms such as CBDCs, and also how it differentiates, for example, to the Swiss banking project. So we try to illustrate that a bit here. What we see on the left is the digital Swiss franc by the Swiss stablecoin, so the CHFD, which is one-on-one backed. So it means that in the middle, in the line of operations, you see the SPV, so that's the Swiss stablecoin, or actually a subsidiary of the Swiss stablecoin, which acts as a SPV, a special purpose vehicle, which acts as issuer of the Swiss stablecoin. The collateral, now on the top line, as said, is held by banks. So the fiat is with banks. The banks, on their turn, have Giro accounts with the Swiss National Bank and have their assets there. If you go further down the line on the left side, we see that the distribution, as said, happens through banks, WASPs as well. And in the end, we have the users at the bottom. If we now look at the Swiss banking model, and I took here just a joint token model. Those that know the Swiss banking model know that there are various or different types of models. And the joint token model was that has been seen as the most promising in the last version. But obviously that's being developed further and might change in the upcoming publications. But it's actually quite similar to what we are doing in the sense that the banks are holding the fiat collateral. There would be an SPV that is the issuer. The main difference is here that the bank or the SPV might have a banking license, which allows them to to act within the SPV as a bank, meaning that it doesn't have to be one-on-one backed, but rather you can engage in money creation activities. So the models are quite similar to some extent and a bit different in the details, but not that much apart. If you look at CBDCs, there is one idea of synthetic CBDCs where you also would have an SPV included. So you have wholesale CBDCs, obviously, which are transacted among the banks. But what we could actually do in the future, also as with stablecoin, is with that SPV that we have, hold directly central bank fiat cash. So meaning that the collateral is not held with banks, but rather held with the central bank directly. That would imply a license asset that's not in existence currently, but that could be some future setup where you would create retail CBDCs in a synthetic way, meaning that you add an SPV in between that holds directly wholesale CBDCs as collateral. It's a theoretical model we can deep dive more into, but it's not something that is being done today. And last but not least, on the right side, we have retail CBDCs, where the Swiss National Bank would directly create CBDCs that are being issued to the retail customers. Something that we talk quite a bit with the Swiss National Bank is currently not on the roadmap to do. That was it from my side, a bit of a deep dive into the Swiss stablecoin project. I'm very happy to answer questions in the Q&A session. Also, if you have any other questions afterwards, feel free to reach out on LinkedIn and we can discuss a bit more in detail.
Thanks a lot, Lydia. I have only one question and then we go on and do the other questions later on. So is it correct to say that since the Swiss National Bank decided not to work on a retail CBDC, that you try basically also to fill a gap here with the Swiss stablecoin?
Yes, definitely. It's a very important point because so our project, as said, is just building on the existing infrastructure, and that includes also the SNB, and we are in quite close contact with the SNB, and it's their, I'll say, their mandate to make sure that there is an infrastructure that's ready for the future, but it's not their mandate to have an infrastructure also towards the retail end client. And they're very open, that they see the need to have a digital Swiss franc, and they're very open to collaborate and to exchange ideas and see how that could be brought forward in a sense that it also matches the current existing idea of our financial payment system, meaning that the Swiss National Bank is in the background in the wholesale area and the retail area is in the hands of private institutions.
Right. Thanks a lot for the explanation. Really very interesting. Let's go to our next presentation. We have a bit more time for questions later on in the Q&A. Maike Horning is, as I said earlier, from Visa, and it's going to focus on the question, what is the incentive to introduce stable coins in the cards business? Maike, please take over.
Yes, thank you so much, and hello everyone. Thank you very much for the invitation and pleasure to meet you. So for the next 15 to 20 minutes, I have thought about what I could present to you from a Visa perspective, a global payments company. So I will try to give a bit of an overview how we think about digital currencies without trying to define it again. We'll talk a bit about the building blocks and then focus on two highlights and two pilots that we've done in the past month, which I thought could be of interest, and then showing a bit of the focus areas of our work today. If you could go one slide back, please, just a little disclaimer. It's not in the presentation, but I need to mention it from there is no presentation from a large company like Visa without a disclaimer, so I please ask you not to share or distribute any of the content that I'm showing today. So if we start and maybe go into the next, this slide, what is the role of digital currencies in global payments? I think what's important for Visa as we look at digital currencies and crypto, using it as an umbrella term today, it is important for us that we add value to all forms of money movement, right? Whether this is happening within our own network of a VisaNet, or whether this is happening beyond. And so as such, we are supporting an area of ways to pay and to be paid. And we study new technologies like blockchain technologies that may impact the future of payments and how money is being moved across different networks, right? So what we are looking and trying to explore when we look at crypto as a whole is to grow our core competencies around the crypto infrastructure layers, evaluating various different blockchain protocols that we believe have the potential to drive real economic activity in the future, right? And so if we dive into the next slide and look at the different types of digital currencies, and again, I think we've heard a lot about the definitions and what the different types of digital currencies are, but from a Visa perspective, we try to service all types of digital currencies, but in very different ways, and we look at them in very different, from various different perspectives. So when we talk about crypto assets that most of us know as Bitcoin and Ethereum, or any of the other 4,000 altcoins out there, then for us, this is really the idea of digital gold more as an asset class that consumer want to purchase, they want to invest in, they want to hold it, and then want to do different things with it. So just like consumers want to buy any other product in the financial market today, we want them to enable them to use their Visa card in order to participate in that economy, right? Now, stable coins, which have been developing at a later stage, is something that we look a lot more as a payment innovation. And why is that? So crypto assets, they still have the problem of volatility and scalability, even though there are approaches to prevent these kind of challenges that crypto assets face today. Stable coins, they have really been successful in solving one of the problems, the problem around volatility. So they really try to make the blockchain rails usable as a way to transfer money by issuing a coin that is seeking to be stable. Now, when we talk about stablecoin at Visa, we look at fiat-backed stablecoins, right? So we're not so much interested at the moment in algorithmic stablecoins or other forms of stablecoins, which might change in the future, but really the stability comes from the fact that it's backed to fiat currencies. And so really, it's the fiat-backed stablecoin that we're interested in. And then CBDC, which is the digital equivalent of fiat, again, very interesting. The next evolution, the next iteration, even though there are many different questions around CBDCs, how the design could look like, what the product around the CBDC is, whether it's a wholesale or retail or synthetic CBDC. So many open question marks around the CBDC area. And then there is the fourth type, emerging, which I haven't put on this slide here, but which has been presented by the speakers before, the idea of tokenized deposits or deposit tokens, which may be a fourth form of a digital currency in the future, but we're not seeing any live tokenized deposits in the market. And you could argue that they fall under the definition of a stablecoin. So many questions around tokenized deposits again. But hopefully this will help you to understand how we look at the different currencies as Visa. If we hop on to the next slide, thank you. Why are we so interested in how do we look at stable coins and digital currencies in the future? It's really the underlying blockchain that is of interest here, right? Blockchains are really entering their broadband era. And so as the transition from dial-up internet to broadband brought faster and more efficient connectivity, the blockchain community has really been working on enhancing the speed and scalability and overall capabilities of blockchain networks, right? So here are just a few data points that underline the point that I'm trying to make. So if you look at the processing of transactions over layer 2 networks, they have becoming incredibly fast and cheap than ever before. We see still a lot of developers centering around specific ecosystem to develop new applications that sit on top of these blockchains. So there has been a 5% year-over-year growth of a developer ecosystem. Why is that important? Because ultimately developers are the ones who shape the products and the future of these blockchain systems and ecosystems. Now, a Another metrics that is often being used, particularly in the stablecoin market, is the total value locked across blockchain. So what value is already part of that ecosystem, which is immense. And then lastly, all of this will be driven by the users. And we now have more than 6 million monthly active addresses across different chains. And so these are all just some important points to remember in connection to the digital currencies and coins that run over the blockchain layers, how they will be adopted and how they will be performing in the future. Now, if we move on to showcase you two pilot examples, what you can see here is an illustration of our stablecoin settlement capability that we've announced first in 2021 when we have began testing how USDC could be used inside our treasury operations. And this has led to a pilot with back then Crypto.com, where we've really made Visa one of the first payment network to test a stablecoin settlement on the issuance side. Now, in May of this year, which is the graph that you can see here, we've been expanding that stablecoin settlement capability to both new players, so merchant acquirers. In this case, it has been WorldPay and Nuvei, but also trying out a new blockchain. Besides Ethereum, we've now tried and explored Solana blockchain as a high-performing blockchain. Now, to explain what we've really done here and what really is that settlement capability, I probably need to explain what settlement is, which you may not know if you're not working around that settlement area day in, day out. It's really a back-end process within Visa that is a crucial step in the payment processing that moves money around thousands of institutions in the world each day. So what that means is, at the end of the day, when the issuer has to pay their obligations with Visa, or when we have to pay obligations to the acquirer, then this is done using traditional banking system. Now, with this new capability, this can be done using a stablecoin, in this case USDC, and using these stablecoins over blockchain rails in the future. What are some of these benefits? Why do we think this is interesting and exciting? Well, it comes with all the benefits that we believe blockchain technology brings, right? Blockchain rails help enable immediacy, so it can allow for settling funds outside existing settlement hours potentially, so 24/7, 365 days a year. There is also potential benefits for streamlining treasury operations that come with programmability, or also with a reduction of a specific costs that are associated with the existing banking system today. Now, if we hop on to the next pilot example, I'll start first talking to it, and then maybe we can try if the video works afterwards. So the pilot that we've done here is a little bit different focus. So the first one was really looking at efficiency and operations around treasury operations. Now, what we've done in Hong Kong as part of the Hong Kong Monetary Authority's EHKD pilot program was to test the feasibility of tokenized deposits together with two commercial banks, HSBC and Hang Seng Bank. The Hong Kong Central Bank wanted to test different use cases and different options for a potential wholesale CBDC and a retail version of that, and how that could be distributed. So what we've done here is to test and utilize tokenized deposits for particular use cases for interbank B2B transactions and across chain transactions. So what that means, one example that you will see in the video in a bit is how you could use that tokenized deposits for making property payments and settlements between payment institutions and merchants. What we've seen from this test is that there are benefits when it comes to B2B payment tokenization, which are increased speed, improved settlement risk management and controls, and also enhanced payment network resilience and greater transaction transparency. So for us, it's really important to go in, partner up with our banks to see where can the technology really unfold new use cases and new value to end consumers and merchants. And stablecoin aspect for this, or the tokenized deposits again, which is just a different version of a stablecoin, is really just a means to an end to make these new rails usable to move money across. And so maybe we can try to start that video. It's very short, it's just 2 minutes long. I hope it works.
As a participant in the Hong Kong Monetary Authority's EHKD pilot program, Visa has completed the pilot in collaboration with HSBC and Hang Seng Bank for tokenized deposits use cases. In the coming years, tokenization presents a significant industry opportunity with untapped potential. To help address this opportunity, Visa is exploring key use cases for tokenized deposits in interbank settlement, cross-border payments, and programmability of payments. Designed to be an always-on blockchain payments infrastructure, Visa's tokenized deposit solutions could empower multinational banks to optimize their liquidity management and help enable interoperability between different forms of tokenized fiat currencies, to leverage tokenized deposits for wholesale commercial payments, to explore the benefits of CBDCs and tokenized deposits in high-value transactions such as property title transfers, and lastly, to support acquirer-to-merchant settlements. Let's look at 2 of these hypothetical use cases in more detail. Stacy is the CEO of Property Development Group. A typical commercial real estate transaction contains about 5 high-value transfers. The current processes can sometimes lead to operational inefficiencies, delays, and increased costs. However, with a hypothetical EHKD paired with tokenized deposits, Stacy and all other parties could tap into the potential benefits of tokenization and have future opportunities to automate complex end-to-end transactions through programmable smart contracts. With best-in-class security features, Stacy could settle high-value transactions with an improved client experience. Alex is the settlement agent at Acquirer. He is exploring the potential benefits of tokenization to enhance the settlement of funds to his merchants. The current merchant settlement process can be lengthy, with multiple payment processing platforms and challenges in reconciliation. Using tokenized deposits directly on top of a distributed ledger system could help minimize settlement errors, speed up settlement for merchants, and in the future, increase transparency by utilizing automated programmable payments throughout the process. Visa will continue to enable the evolution of money movement by exploring tokenization and all the potential benefits it can bring, working closely with our partners to help accelerate the development of the digital economy in Hong Kong and continuing our vision of being the best way to pay and be paid across the world.
Thank you. So I hope this gave you a good overview of what we've been trying
As a participant in
Hong Kong. Now, to round this all up, again, we're doing, I think, many projects across the globe, but really to give you a final outlook into the focus areas and into the future, what we're focusing on are these 4 strategic pillars. So around the crypto assets, we really try to, as we see it currently as crypto assets and more form of asset class, we try to embed our cards and make sure consumers can participate in that ecosystem by using the Visa card to fund their wallets, but also to off-ramp, so by issuing or partnering with crypto exchanges and marketplaces in the Web3 space to issue cards or to accept Visa cards for the payments. The second area is around helping our own infrastructure upgrades to see where we can embed the new technologies for improving processes and operations and products. And then a third area is around helping our clients, our banks, merchants, fintechs, and other partners to develop and execute their own strategies in the crypto space. Again, crypto, using it as an overarching term here, but really helping them to navigate that ecosystem. And then lastly, we're engaging with central banks across the globe on CBDC design and pilots, which involves both the wholesale side, such as we have seen in Hong Kong, but it also includes the retail side. So just recently, we've been partnering with the central bank in Kazakhstan to issue CBDC-linked cards. We've been exploring and doing a lot of research in markets where we have live CBDCs like Nigeria. And so this is yeah, the final slide to also offer that if you're interested in exploring any of these areas with Visa, feel free to reach out to me. We have time for questions afterwards, but also you can find me on LinkedIn. And here's my email address. And yeah, back to the team. Thank you so much.
Thanks a lot, Mike. Super interesting also that you showed us some of the use cases. Just one question. How do you position this, in the retail space vis-a-vis other technologies like zeb instant payment, which is obviously different, but also promises instant settlement? Can you say a few words about that?
Yeah, so as I mentioned at the beginning, Visa wants to create and add value to all types of money movement, right? And traditionally, this has been happening within the VisaNet and the card rails, right? But there has been over recent years, obviously, being improvements in different type of rails that have been emerging, like instant payment rails or blockchain rails. And so we think. As Visa, we have expertise to add value to all of these money movement rails, but also on the consumer and merchant side, these rails may service different purposes and for different use cases, right? Not each rail is providing the same benefits, same protections, same risk mechanisms, etc. So they differentiate across the board, and so as consumers and merchants choose how they want to pay, they may choose for different networks or different technologies based on their specific needs.
All right, thanks a lot. So then let's go. Yeah, thank you too. Let's go to the last presentation today from Tony. Tony will focus on the question, how can a digital Swiss franc benefit the treasury of large corporates? You're still in mute, Tony.
Thank you very much for having me and give me the opportunity to share what we are building. Maybe if we slide in the first slide, thank you. So what we the base on is the thesis that a big part of the Forex market will happen on chain. The longer, the more. This is the basis of our thoughts and our work, and we think that potentially Forex markets that are on chain will influence off-chain Forex markets, and there will be an interplay of these chains. It's the biggest markets, and if we can have the next slide, we see. On-chain markets are growing, stablecoins are growing on-chain. And if we go to the next slide, which is the most important slide, I think in traditional Forex markets, the Swiss franc has an order of 5%. On-chain, it's neglectable. So this is very important to think about in the context of digitalization. Personally, I think Switzerland is falling back here, and there's need for adoption. If we think of digitalization in the three waves of digitalization, first wave digitalization of data with internet and email that changed our lives significantly. Second wave digitalization of communities with social media, and now the third wave of digitalization of values. We have to make sure that the biggest market, the Swiss franc, has a relevant position. So we started with a study where we talked to a lot of enterprises. The study is publicly available with the quantitative values. You'll see the link at the end. We talked to a lot of enterprises and tried to find out if there is actually a need for something that they could use and what exactly they would want to use. So what we saw, there is a big need for atomic swaps, 24/7 treasury management in these large enterprises that are already organized. I will talk a little bit about this later. So that's Google, Tata, IBM, LG, Standard Bank, Dell, Deutsche Telekom. So they're organized in the governing council of a DAG. And I quickly open a bracket because my background is tech. So DLT is the umbrella term, distributed ledger technology, and there is different ways of different DLTs. So there are blockchains and there are DAGs. These are distributed acyclic graphs that can heavily scale up transactions and bring costs down. So there are these big brands, they're already organized, they are all operating a DAG, and what they need is, and they sit on a lot of the native tokens of this DAG, so of the utility that can do transaction of there. So what they need is they want to ensure the utility that they have in this organization continues having the value. And let's not forget, they operate, they had, I think in May, 8 billion transactions on chain already. So it's massive. They want to make sure they can also have transactions internally. So it's an intra-enterprise and the inter-enterprise use cases where they say, okay, we'll have internal transactions. We might want that to happen on chain, and we might want it to happen in a certain currency. So that's the problem that we are solving. We build something that large enterprises can use internally for treasury management, but also other utilities too. So if we can have the next slide. So the governing council members, they want to make sure the value that they're offering, transactions on chain, have a value. So the infrastructure that is built is really, really heavy. So you can have 10,000 transactions for $1, so that's a basis point if you send $1, a finality of 4 seconds. And I think they say they have more than 5 times the volume of one of the big, card providers. So they can do even microtransactions for their IoT devices and use that and make sure that these transactions can have a settlement infrastructure internally in their systems. Also, treasury management is super important, and now we have a very big challenge. So the infrastructure is there, they operate it themselves, they need something that has a value that is mapped with a currency, and how do you do that? So what are we actually building? And we are building a code base. So what we're building is a code base for enterprises. We don't even build interfaces, and this code base can be used to map their utility, lock it, and issue a thing that has a value that can be mapped with a Swiss franc currency. So basically, as Micah said, they use DLT to make their rails usable. But the key to this adoption is, okay, you have this native thing in the case of Adera, it's called h-bar, and you lock it up. It might be a bit over collateralized, and you can use it in Swiss franc or another currency. So how do you map this thing? And that's the next slide. The most important thing to this is, how can we ensure there is a price feed that is correct? How can we make sure this thing that is being used is actually has actually this value, or the collateralization or the over collateralization is actually there? And I think this is the most important part of the solution. So how can you get a very good price feed? And if we think 11 years back with the Libor scandal, I mean, it's like, good brand value doesn't protect you from, difficult implementation. So our position, and then again coming from DeFi, I think it is important to have a public permissionless price feed that can be challenged, and where you have incentives to bring the right data, and where you are punished if you bring the wrong data. So basically, the key pillar of the solution that we're building is Oracle. And we're just building one Oracle. There will be other Oracle used, so that it's not depending on our Oracle in case there is a problem in the code or something. But the key is to ensure the price feed h-bar Swiss franc that is being used by the code repository, that is again being used by the enterprises to map what we are doing. So I think this is the DeFi approach that anyone who wants to participate in creating a price feed can do so, and ensuring a competitive system where you'll be rewarded for good data and punished for bad data. So I think the code base that creates the Swiss franc, that's not something that we're building from scratch. We're building on other giants' shoulders. I think the key really is, if I try to summarize it, we ensure the data feed for the price feed is good, can be challenged. Then we use that data feed to over-collateralize a thing that can be mapped in a Swiss franc currency, that can be used for large enterprises internally, for currency management, for settlement, and possibly also for inter-enterprise settlement. Hedera has already a large stablecoin studio that, it's a very user-friendly interface where you can play around and explore how things are working. So this is in very, very short what we're building. Coming from tech, I think we could go very much into detail because it's a heavily tech solution. So it's not, we don't issue a currency. So I'm happy to go into a tech discussion, but I fear this is not the audience for a tech discussion, which is why the presentation is a bit shorter, but I'm happy to answer questions that can be related to what we're building. I think the last slide is where we are sharing the survey details. You can see the responses, the community who we asked, and where the needs are. I think this is actually very interesting to see that what we're building actually makes sense.
Thanks a lot, Tony, as well. I'm sure there's a few very technically oriented people in the webinar that they would love to ask more detailed questions. But the purpose is indeed a bit more on the business side. So maybe I can ask one question before we go into the overall webinar. Can you maybe elaborate more from a business perspective, the need for a private Swiss franc stablecoin for large corporates?
So what we identified is that they're sitting on this utility, the H-bar that enables transactions, and they want to make settlement. They want to make treasury currency hedging. And I mean, the Swiss franc is just the first currency that we issue because I think it's the most important. So they want to map their utility into a currency. And then they don't need cash to do settlements because the thing they have already has a value, and why not use that value and make sure it is stable?
All right, thanks a lot. So with that, we're done with the presentations. I'm going to hand it over to Cedric, who's going to lead the Q&A session, collected all the questions that came up.
Sure. Many thanks, Norman. So I'd actually like to stay with you, Tony, for 1 second. And I mean, you now mentioned that you came up with a survey to also find out a little bit about the needs revolving around the stablecoin. What type of stablecoin enterprises are looking for? What the characteristics of a stablecoin are? So can you maybe in just a few sentences summarize what you found out there in your survey that I think had a couple of thousand participants even?
That's right. I think we had over 4,000 participants, and we were surprised to see actually that there is a need for on-chain currency that is in a smart contract, so that you have a collateral in a smart contract, and the smart contract is not, or the currency is not issued by an organization or an institution. So this was very surprising to us. We didn't expect that. So basically, crypto collateralized stablecoin is apparently something that can be very interesting to enterprises. Then what we also were surprised that a carbon footprint is important for the solution. We didn't expect it. We asked it anyway. So that was also very interesting. We saw that over collateralization is a need. What we also didn't expect, if you think about fractional reserve banking, so these were surprising results. I think it can be also part of why these responses were result is that at the end, if you ask these questions, only the person who understands the question will reply to it, and we had dropouts. So at the end, I think to the very complex questions, there were not the 4,000 people that went all the way through the survey. So I think we had a couple of 800-900 people answering till the very end. So basically, what existing solution, there's actually need for it. On the other side, these are the quantitative results. The qualitative results that we don't publish is we see the sales cycles and the adoption is terribly slow for my degree of patience. So we will have the first use case in December 24 that will go live. So, and we started this project a long time ago. So 1.5 years we're already working on it. So sales cycle adoption will be super slow.
Mm. Okay, well, many thanks. Now, maybe going over to Lydia. Thanks again for your presentation on the Swiss Stablecoin AG and what your project is all about. Now, obviously, as I understand, you're also looking a little bit for new partners. Potential partners in that case could be banks. Now, what would you recommend a bank representative when it comes to stable coins? Why and maybe also how should a bank engage the topic of stable coins from your perspective?
Yes, thanks for the answer. I can answer it in general terms as well as with respect to the Swiss stablecoin and how we collaborate with banks and what we are actually, how we are currently partnering. So in general, first, I believe that stablecoins in any form, be it private initiatives, be it banking initiatives, be it also CBDCs, and we see that it's a very big push is happening currently on all area or in all types of stablecoin projects. So we believe that's going to have a major impact on the banks. So it's now the time definitely to look into the topic to see whether a bank wants to play an active role in that space, whether a bank wants to actually have a passive role, just being, for example, able to handle transactions, but not more. So there are different roles, and a bank, I would argue, is currently the time to make the education on that topic and also put it into the strategic agenda on how a bank would like to position itself with that respect. That in general terms. With respect to Swiss stablecoin, so we are still in the piloting infrastructure build-up phase. So we are not looking for hundreds of partners at the moment. So currently, what we are doing is we have a handful of interested, let's say, rather bigger Swiss banks. We are having discussions. On one side, on the collateral side, so making I would say the traditional easy fiat collateral management. So that's what every bank could do today. And on the other side, on the distribution side, where you would actually need digital asset infrastructure, wallet infrastructure that can be licensed through another party or can be a known in-house built digital asset infrastructure, doesn't matter. But on those both sides, we are discussing with partners. And if there is an interest, obviously, please feel free to reach out. Yeah. You are on mute.
Thank you very much. Just one follow-up question on that. I mean, as far as I understand, with Swiss stablecoin, you also rather target retail use cases, although obviously you have then partner banks in between. So maybe also looking a little bit at the global stablecoin landscape, would you say currently you would rather focus, if you were a bank, on those retail use cases, or maybe on rather asset management use cases where obviously stablecoins can all be applied?
I would argue both. So what we see, I wouldn't say asset management use cases, but there are other, I'd argue, token financial market infrastructure use cases. So for example, trading infrastructure, which we see currently being built up, especially in Switzerland. So there will be a couple of DLT licenses being handed out next year. So there definitely stablecoins going to play a major role. So a bank could have an active role there. But obviously, on the other side, on the retail use case side, is a very interesting field as well. So I would argue, depending on where the bank is currently having its business in, be it on the retail side, being on the B2B side, on the corporate side, that would also be the focus they should place with respect to their stablecoin strategy.
All right, then moving over to Mike, obviously quite a few pilots going on at Visa, also two very specific use cases or pilots that you showed. Now, a big part of your pilots obviously was a privately issued stablecoin, USDC. Can you maybe explain to us why you at Visa chose this privately issued stablecoin? Maybe also, when you think about the characteristic in terms of risk management and so on that a stablecoin should have.
Yeah, sure. I think when we started to explore stablecoins, that was in very early stages, 2019. Back then, we didn't have many options, right? And USDC has surely been the one that we felt most comfortable with when it comes to the backing security and actual one-to-one redemption and the transparency around that. So there are, I think, different standards as to those stablecoin issuers of how they safeguard their assets, how they back them, how they are transparent and audit them. And so based within our parameters of risk and risk appetite, we judged that this would be the stablecoin that we feel most comfortable with. I should also mention that for the settlement pilots, this is applicable to US dollar denominated settlements, and so it was important for us also that it is a US stablecoin, but it doesn't mean that we're not interested in exploring how potentially other stablecoins or CBDCs could be used for that. It really depends for us on the demand side and what merchants, banks, and users really want to use. And so at the moment, that has been for us at a global scale the only one that we felt suits those needs.
Okay. Maybe now a question a little bit directed towards all of you. Obviously, stablecoins have taken the attention of regulators all over the world. And I guess if you want to start using stablecoins, you also face different regulatory jurisdictions. Maybe in case of Lydia, this is primarily the Swiss FINMA, but I guess then also when it comes to Tony and Mike, you're also probably in contact with other regulators. How do you go about that challenge, of managing all these different types of jurisdictions?
It's a very good point, and not a sometimes easy point in the daily operations to actually fulfill all that. But what we see is that all jurisdictions have the same types of ideas how it should be regulated. So the end goal is always the same, right? And it might differentiate in the smaller parts, in the details, but the overall reaching topics we see in the regulatory initiatives are very similar. And that's also in the phase we are currently at. We are, on one side, we are designing the stablecoin, but on the other side, the regulatory frameworks are also still being designed to some extent, right? So we can adapt those things together. So as an example, we see one point that is not only in Switzerland, but throughout Europe, one very important topic, and that's something that we are just going to comply from day one on, is that the stablecoin we are building is not going to be free floating stablecoin that anyone without identification could hold. So what we see is that regulators, be it FINMA, be it in other countries, they are going to require whitelisted wallet addresses, for example. So that implies for the token that you're building that the token needs to have a transfer restriction built in technically, that it can only be transferred between wallets that are properly identified. And that's also the main differentiation if we talk about DeFi or traditional finance. So we have much more regulatory restrictions, but now in our case, we are looking to comply with all of them, and we are complying with them in such high standards that should fulfill in different jurisdictions the requirements that we are facing.
Okay, maybe Mikey, as you've talked about, well, also Hong Kong, would you like to go next?
Yeah, I mean, I actually think that there is no clear, good regulatory framework for a stablecoin yet, right? We have the MiCA regulation, which will only kick in next year, so it's still proven to be seen if it's a good framework. Many questions are still to be discussed when it comes to these additional consultations and guidelines that you're seeing that they've just published. So it is I think a great first landmark law that we've been seeing across the world, but I think we will still need to see how it works in practice and how stablecoin issuers will be able to comply, and how this will work with the different business models, right? So I can't really, I mean, that's interesting maybe to hear from Lydia more on like how you perceive as a stablecoin issuer these regulations, right? But I think it's been a first attempt, right? And now we're seeing a new stablecoin regime proposal in the UK that has been brought forward, which is taking a slightly different approach, a very interesting one. It's taking the same approach to the MiCA by saying, okay, we differentiate between two different types of stablecoins, ones which are systemic, ones which are not. But we have many open questions as to when do you classify as these type of stable coins? What happens to stable coins that are issued elsewhere outside of the UK? How will they be treated? So I think regulators have the same idea and same objectives to maintain financial stability and to ensure risk is not increasing, to look particularly at consumer protection, and consumers are being treated here. But I think regulators are still on the search. What is the best framework and how it could look like? I think, again, as I mentioned earlier, big question marks around tokenized deposits, whether they fall in. Same for CBDCs. It's not fully clear if every country has a legal basis. New laws need to be passed in order for central banks to have that mandate to issue these kind of digital currencies. So I would say, whilst there is a push and an interest to regulate, it is still a question mark of how they will work in practice. And it'd be very interesting for us to see how stablecoin issuers perceive that, and how they position the business models compared to maybe e-money regimes or existing banking regimes. So I still have many questions, and I think it's going in the right directions, but it's not fully clear to me yet how it will evolve and impact the industry.
Tony,
you're on mute.
Maybe if I can add my the thoughts from our side. So we have a green light for our part of the solution, for the tech part of the solution. However, we talk and to the adopters of the code repository that we're building, and we have already 2 enterprises that have a green light for their use case for what they're building. You also have to think that Hedera is quite an enterprise solution in the sense that users are identified. So that of course helps the adoption. But again, what we're building on the tech side is clear. All the adopters are checking their things, and we have 2 big enterprises who already have the green light for what they're doing. Of course, we also monitor what will happen. And again, the adopters, the users of these need to look at it case by case. I think this is super important, because you don't want to create risks and not manage them and not monitor them if you are a large global organization. And I think that's also why adoption, takes a bit longer than just an SME use case.
Tony, you now mentioned several times also the Hedera Governing Council, that, as I may put it, obviously drives forward a little bit the development of the entire space. Now, how, let's say, difficult is it to come to, let's say, common understanding among all those different enterprises? I mean, given that it's such a huge number and also very, very big names.
So I'm not part of the governing council, and I don't know what the discussion and governance mechanism internally are. So I can only share what I see from the outside. Of course, even if you talk to one enterprise company, it's hard, sometimes you talk to someone and then you need a partner, and then you have to find the right partner in. And again, I think the governing council mainly manages the tech side. So, and that has been done very, very successfully, and must say the tech is very, very solid. So that's helpful in terms of adoptions of business cases. And what we are building, we're talking to units, not to the governing council. So there's several units in the Hedera ecosystem, and we talk to the Hashgraph Association in Switzerland, who is our direct partner.
All right. Well, with that, we're already almost through also the Q&A. Maybe I'd like to give each of the speakers, the opportunity to conclude their input, maybe with one single statement about stablecoins. Maybe, Tony, would you like to start?
I think stablecoins are an interesting world to start the discussion about what is a currency, is it more than a legal tender, and what currency do we want to have in our respective society. So it's a starting point for a debate, and we should create this debate in communities like enterprises, but also in a society.
Lydia, maybe?
Yes. So we have an existing financial infrastructure, an existing payment infrastructure, and now we have the technical opportunity to extend that payment infrastructure with added functionality. And stablecoins or CBDCs in any form bring the possibility to do so. So it's an interesting topic to get engaged in, and I believe that the next couple of years will show where the journey is going for all those projects.
Yeah, I think stablecoins have proven to have met the product market fit test in the past years, and I'm excited to see where we will see new use cases, and as traditional banks and traditional players will feel more comfortable utilizing and testing with stablecoins as we have regulation kicking in the next years. So product market fit is there, but maybe more use cases will pop up when we have a more clearer framework for stablecoins to operate in.
All right. Well, thank you so much for your different inputs with all different angles, also international pilots and so on. It was very interesting. I guess that only leaves me with saying also thank you very much to all participants for taking their time today, for listening in. This was the third ZTB business event that we held today on the topic of DLT and digital assets. And well, we, I guess, would like to conclude with that. Thank you very much, and hope to continue in this setup also next year. Thank you. Bye-bye.
Thank
Thanks
you.
a lot. Bye.
Bye.
Thanks a lot. Bye.